Okay, so welcome everybody. Good morning, good evening, wherever you are in the world. We are having another session of Hype Live today, and today it's a pretty special session where we are talking about investments in sports. So we have a great panel today of experts, investors, and we want to touch a few points. I'll just mention briefly whether this is time to hold everything and wait, or that's maybe a good time to be all in and find the best startups, best investments ever. We're going to touch where is the best place to invest in sports, whether it's esports, whether not to touch esports, and other topics which are hot now and we should focus on. We're going to talk about the impact of COVID-19, in terms of the startup valuation. Is it a different negotiation now? Let's hear the investors, how they see it. I know how startups are viewing this, but interesting to see how this is being looked at. We'll speak about generally investment preferences and the way to look at the future. So I'm sure it will be a fascinating session today. Great panelists, and I want to start by doing a quick round of introduction. If you can give us 1 minute, your 1 minute elevator pitch. The startups always keen to hear how you investors are doing this pitch. So let's give you a shot. Andrew, please.
Yeah, thanks. Happy to go first. I was a rubbish professional golfer, which then led me into a sports management career, focusing on our athletes' emotional, mental well-being, which is something that affected me. And through that, built up a lot of, working in the right way, built up a lot of good relationships within sport. And for the last 5 or 6 years, look, honestly, almost accidentally, I advise tech companies in lots of different shapes or forms. So I advise mainly international tech companies looking to get into the UK and European sports market, or looking to get further into the UK and European sports market, and also do a lot of stuff around innovation, incubators, accelerators, and also some investments with some VC companies.
Rubbish professional golf player. That's something I will take with me.
Trust me, I was rubbish.
And that's a way to do a 1 minute elevator pitch with this. This will stick in our minds for sure. Kyle.
Yeah, hey guys. Name's Kyle Bunch. I work for a company called RGA. We're a global innovation company working with big brands, Samsung, Google, Nike, Verizon, and really kind of all things innovation, whether that's designing, strategizing, building, investing, kind of the full spectrum. I specifically work within our global sports venture studio. I lead that practice where we're working specifically with sports partners. It's a direct partnership between us and the LA Dodgers that has Major League Baseball, Major League Soccer, UEFA, Fox Sports, Dick's Sporting Goods, and all of these partners, growing set of partners coming together. And, for us, it's however we can help people move faster towards whatever those innovation goals are. And now, especially, sometimes that's going to be investment. Sometimes that's going to be strategic partnership. But the name of the game is really, being able to move quickly, being able to, manage risk at this moment where, making the wrong bet can have, particularly adverse consequences. So, so that's kind of me and trying to kind of bring a couple perspectives today. So thanks for having me.
Great. And you're from London, yeah?
I'm actually from California originally, but based down in Austin, Texas now.
Austin, Texas. All right. And Andrew? Andrew, where you are?
Oh, sorry. I'm in Leamington Spa in the Midlands.
Midlands. Ooh, yeah. Very nice. UK. And let's go to Boston. Dear Gayatri.
Hi, everyone. Super excited to be part of this panel. So my background is I used to play tennis, and one of my coach, he was a very well-known coach, and he used to actually coach some of the top tennis players in India and outside India also. And he told me that I should take studying physics, math, and all those seriously instead of playing tennis. And I took it seriously. I think I'm not a very good tennis player, so I went and studied physics, math, and instead of completing my PhD in physics, got a job as a database architect and Hewlett Packard Labs, worked for IBM, worked for Goldman Sachs. I had my own consulting company on the data analytics side. And then I worked for Federal Reserve Bank of Boston. I was a senior executive managing their largest US military and Navy program, again, on the data side. And previously I was a GP at a sports fund. We sold that fund, and now I'm a partner at Hype Capital. We are the venture arm of Hype Sports Innovation, the largest sports accelerator in the world. And I also sit on a couple of large asset management funds board, and super excited just to be a part of the panel. And I think sports right now is at the intersection with COVID-19, is pushing to take data much more seriously. And as an investor, we are looking towards bringing more opportunities at this intersection of sports and technology.
Great intro, and we'll come back to you soon, Gayatri, to hear, because I know you have very strong opinions on the right topics. Let's go to Hampus.
Yeah. Hey, everybody. So used to play semi-professional football. As it turns out, I was quite rubbish compared to my teammates going to Bayern Munich and Man United, and I ended up in the VC world after a long journey. So I've co-founded companies. I have co-founded venture capital funds, which is basically what I'm doing now. So I'm a founding GP at TrueSight Ventures based out of London and Stockholm. So I'm in Sweden right now. I've got friends on the boards of Premier League clubs. I've interacted with a bunch of the Premier League clubs and a few of the other kind of bigger sports, both in Europe and the US. So a keen heart for sports, but of a firm belief that it's quite hard to invest in.
Ooh, you took us straight to the the first topic, Hampus. So I would like to be, I would say, a bit. Okay, Laurie, are you back?
Yeah. I'm Laurie. Thanks, guys. Apologies. I'm in London where they don't have internet, right? It's a pretty civilized city in some respects, but apologies for cutting in and out. For my sins, I spent 30 years in banking. I was on the board of a few investment banks.
And we lost you for now. So let's jump straight into it. Laurie, I'm sure will find the Wi-Fi in London and join us shortly. Let me ask you the following. I spoke to a few investors back in March, April. Most of them were undercover in the lockdown, literally, and they said, we are not investing, we are on hold, we just need to manage our losses, leave us alone and leave us all alone. And that's who we are, and that's where we are. On the other hand, I have a good friend in Tel Aviv that always says to me, when there is a big crisis coming in, there is a global crisis, he's taking his bag full of cash and he's out there to look for the opportunities. Yeah. And I do speak now to a few investors which are saying this is the best ever time for sports tech now. Everything was moved 10 years forward. There are tons of opportunities. Prices are reasonable. That's the time to invest. So, I will start with Hampus that already gave us a clue where he is on that. And I'm sure there will be different opinions here. Please.
Yeah, no. So we're extremely active and have been since kind of this whole thing broke out. I think now is the time to invest. I think now you make great deals. Now I think there are opportunities to get in on some very, very great deals under very favorable terms. So it's time to use the phrase venture capital, right? I mean, that's why we're there, to take proper amounts of risk. Then obviously depends a bit on where you are. I can understand that if you're backing companies that are late stage and with high burn rates, obviously that's a bit different compared to early stage, which is what we're doing, right? We're seed and pre-seed investors primarily. So that's kind of the general view. Now, I completely agree. I think this has been fairly quote unquote good for the sports industry. I think a lot has happened, and I think a lot of players in the sports industry and sports related industry have been forced to look at things from a bit of a different angle. The way I saw it when working more closely to it was that it was fairly old fashioned. A lot of guys wanted to take bets, wanted to do things, but it was very hard to push through in a very old fashioned type of industry, bearing in mind football or soccer is where I interacted the most. And that was it was a hard industry to penetrate for various reasons. A lot of old geezers working in that industry. So we've looked at various sports, various technologies, but hopefully this thing has brought something good with it, which has hopefully taken the sports industry into the front lines of actually making use of the technologies that are there to be used and to get a better interaction between perhaps sports club fans globally and so forth.
Got it. I understood from you that you're active, but I would say it sounds like the music is quite reserved. Let's go to Kyle, where you are in terms. We saw Peloton, yeah. Going from 4 billion to last time I saw it was $20 billion, and just penetrating now to Europe and just early stage. What's going on? Where are you on this scale? Are you,
I think first off, I think there's always going to be opportunity out there. I think Hampus said, some of the right things as far as looking at those earlier stage opportunities, particularly where, your risk may be lower and you may have a little bit more room. For me, it's so much of looking at, who the company is you're talking to and who they're going to have to sell to. So, Peloton, really great example up front, right? They're selling to consumers. This huge consumer shift happens. Now, one of the things I saw right before I got on here was seeing some of that. We all talked about this, 10 years worth of progress in commerce in 6 months. It's starting to backslide a little bit, unsurprisingly, because stores are open again. And I think where we'll land is this kind of hybrid model where we're still buying a lot of stuff online, maybe just picking it up locally. But point being, if 2 months ago you were like Peloton and investing in other things, banking on, gyms are done. Well, sometimes it's not that dramatic. So I think you just have to be mindful of how far will consumer habits shift. It's the old, we'll probably overestimate it in the next 2 years. We'll underestimate it in the next 10. On the B2B, I'm selling to teams, I'm selling to leagues. That's definitely you'll kick me off for using the most trite sort of, but it's a Wayne Gretzky skate to where the puck is kind of moment, because the money isn't necessarily the people that the checks aren't necessarily there right this second. At the same time, we all see huge dollars lining up in terms of PE money that's going to come provide liquidity to those teams, in terms of right down to leagues, right? Over there, you see, and a lot of that money is, I think Gayatri hit on it. It's going to go towards the modernization. It's going to go towards things that we've been trying to justify for years. I remember working at RGA in 2009, the number of projects that suddenly got greenlit in a down economy because the economics shifted, and you said, well, hey, if this can streamline this and remove that bottleneck, now that's worth twice as much to us as it was before, because efficiency is so important. So my point being, I think when you're out there selling to professional sports, you just need to be mindful that it's going to take a little bit before that category is really built back up. On the consumer side, just making sure you don't get overzealous about how quickly change may come in certain areas.
Got it. So you made the differentiation between direct to consumers and the brands, clubs in the middle, and that's interesting. I saw Gayatri, agreeing. So, what's your take on that, Gayatri? Where are we now in terms of investments? Is this the best ever time, or stay away?
So I totally agree with Kyle. I just want to mention a few days ago, I don't know if you guys have noticed, private equity funds can now invest in sports leagues. And there's a huge change that is coming. I cannot talk that publicly right now, but there are movements in the industry that is happening in the private equity world where they want to come and invest in sports. And when you're seeing the effects of COVID-19 is the shift, is a little bit of shift in the economic relationship or the ecosystem relationships, because now people are trying to rebuild relationships with the broadcasters, sponsors, and partners, amid the in between the difficulty and the financial ramifications of abrupt shutdown. But we will be seeing a new rise of asset class that's going to come out of sports, and that will be at the intersection of technology, because I think there will be, obviously I believe there will be a much more hybrid models when it comes to the operation side, execution side, and we will be seeing much more different kind of forces that are coming to adoption. But this changes was much more needed, and I think COVID-19 just gave the nudge. And given the exposure and the liquidity issues that we're seeing with the rapid shutdown, we will be seeing what kind of diversification of portfolios that will be happening in this region. So not just startups, technologies, but also in the sports leagues and the different regions. I also see a big shift happening towards, the venue strategies, because we know the future of smart stadium that is coming with SoFi and others getting built. But there's this current crisis has put that at the forefront. There is always a change that is happening, but the change was happening much more slowly, so that it doesn't disrupt the system. But currently, COVID-19 has already disrupted the system. And so there is definitely a sudden shift is required, how the venues, how the contents will be used, and how we can engage with our fans, with our crowds. Obviously, augmented reality and other things will come into the workforce planning. So I'm definitely positive towards the future of sports, because I think what we will see as a new economy that is emerging from this.
Great. Let's catch Laurie first before he disappears. Hey, Laurie.
Yep. Hey, thanks, guys. I would just say, look, the only thing that's universal about crises that we've learned in the last 10,000 million years is that they always do end. Okay? We just don't know when. Okay? That's the big problem. So when you look at it, the big issue and the big challenge I'm seeing for sports franchises in the UK and Europe, which I'm involved with, is trying to make more out of non-match day revenues. How do they speed up and accelerate the process, whereas before they just used to rely on media revenues. So things that are helping connect on that basis are getting great traction now, whereas I think a few years ago they got no interest from many of the sports franchise owners because they just couldn't care less or didn't understand it or didn't want to understand it. Now it's mission critical to them making survival or making a business. You're also seeing a change in ownership of the franchises from what I call owner entrepreneurs to professional investor groups. Professional investor groups are capitalists by nature and they're trying to make money. And therefore, they'll do anything they can to try and make money, which means they embrace technology, startups, new ideas a lot deeper than they would have done even 2 years ago. And that's even the very big groups. And the final trend you've got is you're getting globalization and diversification. You've got to be able to think globally, and you've got to be able to diversify your revenue streams. And these are not easy skills for owners of sports franchises in Europe to do. In America, you're probably 10 to 15 years ahead on this basis. Just looking at the way the NFL monetizes sport, it's just incredible compared to the amount of content there actually is in the NFL. And I think what you're seeing is this beautiful crossover now, where actually there is a lot of demand for things that will enhance non-match day revenue, and actually some really, really interesting startups too. I think the ecosystem, the quality of startups has dramatically.
I think we got our share of joy out of the wisdom of Laurie, and we need to move on to Andrew. Andrew, what's your take on that?
Yeah, well, look, I'm gonna jump fully on the bandwagon here with what Gayatri and Laurie was saying. Is that big finance is circling? It's all, it's already circling. These guys are
Guys,
going to swoop in.
I'm totally used.
And with that, we're going to see rights holders having to change their methods of working. And what I think what Laurie was getting at is that these guys are cutthroat business people, and they have an obligation to their investors to make as much money as possible, and and whatever revenue stream that is available to them from a rights holder. I think it's fair to say that we've been relatively lazy because of the amount of broadcast money that's been floating about. We'll sell a few shirts, we'll sell a few pies, whatever. That's fine, but these big finance guys, that's not going to be enough for them. So I think the positive from a technological point of view is that these guys, if they see something that they think will help them either engage with a fan, and I actually touched on it before with the data, fan data is going to be absolutely crucial to these guys. They will be sniffing out every single possible revenue stream, and I think that's I think that will be a positive for early stage tech companies. I'm not sure if fans will like it too much, but I think early stage tech companies will be a lot more welcomed than they have been.
Got it. And I will also share my 2 cents here. We've just completed a global virtual accelerator last week, and with some of the biggest brands of sports clubs, federations. And we have overall 100 investors that joined us recently, fully engaged in the program. So I don't think this was that, we didn't have this engagement before. So I think it shows something about the appetite. Let's see how this is developing. And I agree with what Laurie said. I think the level of startups is growing dramatically, is really, really high end. Maybe technologies came from different areas, different verticals, and are now implemented in sports. And great, I would say, appetite from the clubs, the federations, the brands to innovate, to use innovation to really bring sports back, to really make better experiences and impact, I think, any aspect of the sports. Now, let's talk really, go down to business. If we're looking at investing in sports, from your experience, I know it will probably be a bit shallow, but what are the topics that are going to be, hot trends? If we look, just as, if I'm an investor now sitting in New York or London and I listen to you, and I'm not investing necessarily in sports, I have invested in different other, but I now look at the hype and I would like to explore investing in sports. What would you recommend? What are the topics? Should I go to esports straight away? Where should I look at? Let's start with Kyle.
Absolutely. So I'll hold off on the esports part for a second. So to me, where I think we've had success, there's certainly very pure play sports investments. And then I think there are ones that start to have these applications that go into other places, right? That kind of give these other growth paths. And, the straightforward ones, if they do really well within a category, can certainly thrive. But where things often can get really interesting is where it does start to bleed into other areas. Like a super heightened example would be BAM Tech, that became much more than just like a way to stream sports. It became crucial infrastructure for the whole internet. So the three categories more broadly in society that I think sports can sports investments can potentially open up big, huge, multipliers as far as investment goes. One is general shifting face of the definition of fitness and wellness. And so, your Peloton, your virtual fitness is part of it. We already saw this kind of evolution into greater emphasis on recovery, on sleep, on that aspect. Well, now you're only seeing that much more emphasis on it because that has a direct corollary to how safe can I stay when I leave the house? How strong is my immunity? I think you'll continue to see that. And you often what we see is like what trickles down from the top. And so listen to a podcast of 90 minutes of LeBron and his trainer talking about cryotherapy, all these things. So there's that category where you could look at things sports specific that can start to shape that future of fitness. The second is education. And to be real, like youth sports is going to fall apart if there aren't real dollars going into it. And some of it's going to have to be sort of not-for-profit, major endowments, major support. But a lot of it is going to be how can innovators really challenge themselves to do things like make up for serious gaps in terms of coaching. I mean, you have some of the underserved areas where you have coaches who aren't even trained in basics like CPR. You have, like, not to mention coaches who don't know how to teach the right way and have a much higher increase in the injuries in the kids they're coaching. So I think we have to look at that, which aligns with the larger ed tech narrative, right? How do we provide quality instruction, quality mentorship, all those things? The third gets into all of the core of sports fandom, right? Media, live experience, all these things as they shift, as we know sports is this premium IP that if anybody's, we don't know what's going to happen to concerts, but sports is going to put butts in seats as soon as they can. We don't totally know what the future looks like in terms of what we'll be watching, if it's Fortnite, if it's Netflix, whatever. We know sports is going to be in that mix in some way. And so I think you look at those three and you look at investment opportunities. Certainly don't get ahead of yourself and think, oh, hey, how do I invest in the next Peloton necessarily right out of the gate? But look at those as three major areas where sports is going to shape broader investment categories, in my perspective.
Excellent structural answer. Thank you for that. Let's go to Gayatri. Gayatri, if I'm an investor and I need to put my air condition up because it's not working, 1 second. Where shall I invest? What is what's your view?
So I first want to start with some of the billionaire investors. Like, we just got the news, Steve Cohen, which we all knew was happening. We just got to know Steve Cohen just bought Mets for $2.4 billion. And I think he was a minority owner. Now he became a majority owner. So if you have that kind of billions of dollars, that's where you go when you know the valuation of some of the clubs are low. And I think the future lies like where the problem lies. Now we will see there will be a tackling of the problems that are coming, especially how to engage fans, the fans who are like millennials. I'm at the very upper corner of the millennial side. So people like us, we don't like to go in the game. We like to watch mostly on our cell phones. So the rise of technology, has kind of made it like exponentially easier to view sporting events, like where we are from the comfort of our homes. But I think the professional sporting groups, whether it's NBA, NFL, soccer, and others, they have to find the ways how to make it much more like a bigger opportunity. And I'm not talking about mobile applications or others coming on the app side, but also how to integrate the fan engagement and monetize from that. And I think from Hype side, we did one investment in a company called Tokabot, which is the AI predictive algorithm startup, where they're working with the publishers and the sponsors to engage fans and know beforehand how many fans will be going to to watch the game, how many fans are involved currently talking about the games before the game, during the game, and after the game. So having said that, I think the game day experience is also a very big thing. We have seen some of the Hype's portfolio also that are enhancing the game day experiences, whether predicting what they're going to eat, or even a real-time scenario that if the consumers are consuming this amount of nachos or Pepsi or Coca-Cola, what's going to happen to our inventory? I think there are a lot of things at the back end that plays an effect in the game day experiences. And I think those are the challenges that can be solved technology-wise, and that can be solved if you put a good chunk of money in that direction. Obviously, there are T-shirts and bunch of other things that gets played in effect, the kiss cams, like how people want to put their experiences on a t-shirt or different kinds of videos they want to experience during the game day. I also think there are a few other sectors that will come into effect, which I touch base a little bit about predicting the future, and which I talk about more like a promise market fit. And I've always said that sports is one such area. The moment you associate your technology with the opportunity of any kind of platform that is related to sports, whether it's players, clubs, federations, you are building a trust immediately in your product architecture, in your platform architecture. So immediately fans can relate to you, and there's a loyalty factor that gets played in effect. So I think this promise market fit is a huge thing that most of the technology companies, and also we are seeing a lot of funds that are coming in area, they want to bring an asset class around it. And as I said, like sports is the biggest ecosystem when it comes to consumers. You don't have to be an American or a European or an Indian or Asian to enjoy a certain kind of sports. We all understand the language of sports. And I think that is the biggest thing to tap in for any investors right now. Obviously, right now, we just want to focus on what are the problems, what are the challenges, because I feel when we think about platforms like Facebook, Twitter, and others, they were brought from, they basically came out from zero. They didn't have any loyalty fan base. But nowadays, you get up in the morning, you feel like, oh, can I check my Twitter? Can I check my Facebook? So that urge that is coming, that is out of like, okay, what's the next thing that is happening? And I think sports is one such area that still yet to tap into the market of the consumer psychology, because which is already existing. But I think if we tap into the promise market fit and understand the consumer psychology and how to monetize that data, that behavior, I think world is the oyster for sports investment.
Great. I heard a lot of emphasis on fan engagement and the future platforms to make this experience better, including all verticals in sports. And Gayatri, you know this very good, but when we started 5 years ago, we had a sport tech accelerator. Now we have vertical focusing on motorsport, on winter sports, on cycling, on fan engagement and broadcasting, etc., and sports betting.
Well,
And
I did not know about the
hundreds of startups. Sorry?
I did not know about the winter and the motorsports.
Yeah, that's new. That's so have if you think about the evolution of the industry, there is I think quite a clear, I would say, signs when you have hundreds of startups already in each vertical shows a lot about, I would say, the fast evolution of the industry. Hampus, you sit there very quietly. I'm sure you want to kick our head with your thoughts.
Yeah, I think sports is big. I think there are many different parts to sport. I think it's very different. I've got people in my surrounding owning teams. I know how hard it is to make money off a team, which is obviously quite different from the esports industry, which is quite different from selling tech solutions to leagues or whatever it may be. So it's a very big spectra that we're talking about, and I think it's very, very different from one another. I'm more on the tech side of things. We've been focusing our efforts on esports. We made a few investments in the space, but I think it follows kind of the same problems as sports in general. That it's quite hard from a financial angle to monetize on fans, which is a problem in esports. It's a problem in big sports. Man City has tried buying up clubs left, right, and center. I don't know how that served them yet, but all in all, I think it's a matter of definition. I think there will be probably a lot of opportunities on the tech side in sports. Just buying leagues, and I know that there were funds raised to make sports investments and so forth. And that's always been a go-to strategy for the rich and famous, right? It's a way to show off, not necessarily perhaps the most intelligent financial bet out there.
Got it. Andrew, your take?
Yeah, so again, I'm gonna agree with Gayatri in that I think with certainly with the fragmentation of broadcast media rights, we're going to be consuming sport in a completely different way on a lot of different platforms, and I'm not sure if we've still quite realised that the younger generation, certainly not my generation, but the Gen Z generation, don't consume content in the way that we do. Short clips, short formats, highlights. This is how they're consuming. So I'm always really interested in technologies that are pushing people to OTT or streaming, but most importantly, keeping them there through gamification or through betting, or whatever it is. So I think that's definitely one play, because that fragmentation is coming. It's already here with multiple big tech investing in rights. I think data aggregators, data engines that provide rights holders a much better insight into who their fans are, not just having 2 million email addresses or whatever it might be. Data engines that can help those rights holders engage with the fans and essentially monetize them. And also, I think, just going on the back of big finance coming in, I think those guys will be a lot more open to the technologies around injury prevention. They'll see a direct correlation between your star striker being out for a year and a loss of revenue. So they certainly won't shut the door as arguably a lot of them are currently. So there's lots of different opportunities, I think, and certainly not my specialist subject, but esports. It's not a sleeping giant. It already is a giant, and I think if I was an advisor and a rights holder on it, I'd be saying take a position and take a position quick, because you're not going to win. I don't think you're going to win the Gen Z war without one, or without a significant interest in it. So however that might look like, get involved in esports.
Yeah, get involved in esport I think as a general concept is great. The only question is, how do you do that? Because this is like a jungle, plenty platforms, a lot of, I would say, speculations about the future. You bet on a specific platform, how do you play it? And that's another whole topic. But talking about COVID, if you saw a startup prior to COVID and valuation, let's say, was 5 million, and they were, really amazing early stage startup. Now, if you meet them, do you look at a reduced valuation, or not really? Kyle?
Sorry, guys. Finding that mute button was tricky. Again, not to give the cop-out answer, but I think totally depends on kind of the category they're in and what this disruption does to them, right? Like we saw some that ultimately are fine, but got hit by a specific deal. Oh, hey, we were trying to get this deal done for March Madness. Oh, there's no March Madness. Like we really kind of needed that. But ultimately what we provide is maybe even more relevant. Then you have the ones where it's like, oof, our whole solution was like counting on packed stadiums. All right, like that's one that I think definitely have to look at. Is there a viable pivot? If not, we got to kind of revalue. And then some of those that we've kind of touched on. The ones, I have a friend who 6-7 years ago was a practicing yogi and built his own platform to stream. He moved cross country, wanted to stream his classes to people on the other side of the country, built it into a platform for others. Was chugging along, bootstrapping. May rolls around and everybody from Walmart to investors are all calling him going like, how do we get this potentially to consumers? How do we get this internally? So there's those kind of businesses that just saw this, huge growth. And I think there it's the other side of how do you just make sure you're not overvaluing that, how you're, making the right kind of bet now that can maybe scale over time if you get some more kind of trigger, some more proof points.
Good. Hampus, you saw a startup, great startup, 5 million before COVID. What's happening now?
Well, boring answer, but it depends. Again, kind of how you look at the future. We have had a few companies getting hit, losing 95% of their markets, and we've had guys that have been complete winners and are now scaling up extremely quickly because of a changed marketplace, right? So it depends. As always, we try to have a view on what the future will look like, and that leads us to all of our investment decisions as it goes, right? So hopefully we'll be able to have a decent view on what the future holds and make a few good bets as it goes. But as mentioned, we've taken a few esports bets. Those guys have obviously had a pretty decent run since this whole thing started, since people are now pretending to work more and apparently gaming more than they used to from home, whereas other things focused on stadium entertainment and so forth has obviously not had a great run so far.
Got it. Katri?
Yeah, I agree with everyone. I think it depends on which category you're investing. Obviously, as I said, there's a lot of money in the private market right now, though there's a stop in the investment sector. Wise, like if the money is flowing across, different sectors, certain sectors definitely saw a little bit, dryness. But I agree that obviously the valuations are much on the lower side in Europe compared to US. But US is not seeing any kind of slowness that is happening. Obviously, maybe in March or April, we saw a different kind of movement. But right now, there's a different shift that is coming, and especially with SPAC, which is like the new blockchain kid in the block. Everybody's doing a SPAC. We are seeing a lot of sports companies. I think DraftKings went public through SPAC with SB Tech. We all know the story. And we will be seeing many more sports companies going public. So we will see how the valuation gets played in effect. But I think sports will definitely win when they are doing a SPAC or doing an IPO, because most of the valuations, I'm talking mostly on the late stage side, they don't have outrageous valuations like Uber and others where you really have to take market cut down before you do an IPO, because we always know IPOs are associated with, initial underperformance and long-term underperformance. So overpricing and underperformance, that's a interesting angle. But again, for early stages, this is the reason I came into sports investment, because valuations are always low when it comes to sports technology startups. They have not reached their outrageous standard in terms of Silicon Valley. So obviously, I don't think that valuation will be a problem. But I think the more and more money comes into this area, we need to see how the future plays in effect.
Andrew?
Yeah, I think sitting in the middle of some of these deals between investors and certainly early stage technology companies, I haven't seen many of these businesses go, oh my God, COVID have hit us, we better strip 20% off our market value. I think if, like I say, at an early stage, if it's a good business, it's still a good business, during or post COVID. So no, I haven't seen a huge dent in it. I think probably when the next rounds of funding, then there probably has been some bartering. But look, I think investors have been pretty fair in the deals that I've seen being done over the last 3 or 4 months.
Got it. I want to use this opportunity where you are here, and I know we have a lot of viewers and listeners on the podcast as well, which are startups. And you see hundreds of pitching of startups every year. Already, I'm sure you have your tools of how you get the essence out of it. And I want to ask you, first of all, about storytelling, how important this is when a startup is meeting you. I know that's a question they often debating. And also, what are the most important thing that is, it's important in the first pitching, when startups is pitching you for the first time on the phone, on Zoom? What is I would say the top topics you would look at when you engage with them? Let's start with Hampus.
Yeah, I think there's a personal flavor to it. I think every investor probably has his own feeling around what they want to hear and so forth. Personally, I think it's all about storytelling. I think it's about being able to tell a coherent story from kind of the start to the end. We look a lot at team. We look a lot at market sizing. So those would be, in my opinion, the two most important factors of early stage investing. So explaining to me why you will be the one that will succeed and how you came across that knowledge and how you're going to develop your company from something out of a garage to something extremely big, and how I can help you on that journey is what I'm looking for in kind of a first pitch. And if you get that connection, then I think it's a matter of a few meetings rather than a longer process. If you don't, then there's kind of no amount of meetings that can kind of turn it around. So to me, storytelling is one of the most important factors of all.
Would you be able to make an investment just by meeting people on Zoom?
Yeah, we have. So we've made maybe not one a week, but we've invested at least 3 times per month since this whole thing started. So we've been extremely active. Again, this is venture capital that we're talking about, right? This is our time to shine. This is where we make our best deals. At least that's my opinion.
Yeah. What you're saying is, don't let my laid back approach to confuse you.
On the contrary, I love a good laugh and a good talk, and there needs to be a personal connection, which is a lot harder on Zoom, but it's definitely doable. And there have been plenty of companies that have given me goosebumps over Zoom as well, which is a good sign.
Andrew, I'm sure you have some interesting insights on that.
Yeah, sure. I think I think the pitch decks that always excite me the most is when you see the first slide and they explain the problem that they're trying to solve. I think, and look, we don't always know. Sometimes I can read a 20-30 page deck and think I'm still not sure exactly what it is that they're trying to achieve. And I think try and keep it simple, really spell it out. I'm a simple man, just spell it out exactly what it is. Where is the problem that you're solving? Because if you're not solving a problem, then, we're going to have a hard time selling it. If it's just a desirable thing for rights holders to have, especially at this moment in time, it's going to be tough. I want to see what, day-to-day business problem you're solving. Second to that is I know in the VC where we always harp on about the team. Yes, the team is incredibly important, but I would rather see a 2-person team with a load of enthusiasm and a lot of honesty. Just honesty. Just say, hey, look, it is just me and him. This is where we are. Just be honest. Don't, please, just call it as it is, and be able to, take the questions and don't take it, as criticism, or don't take it personally. You have to be able to take a bit of constructive criticism, because if you don't feel that connection in the first few calls or the first few meetings, then it's a non-goer.
Patrick?
Yeah, I think storytelling plays a huge effect. It's all about how you control the narrative, what narrative that you present to your investors. Because most of us here are early stage investors. So early stage investors, and I always say that we don't invest in product, we invest in people. So it's all about how the dating goes, how the relationship plays in effect. But at the same time, a lot of investors are also interested to find out that how will you play the execution and what milestones you have achieved. Obviously, we are not angel investors. We are coming at a post-seed round or Series A round. I'm also a venture partner in another early stage fund, and we are always looking for startup performance data. And I think I have always seen most of the founders are very open and transparent about their startup performance data. And I think that is very helpful for the investors to understand, like, what are the problems and things that needs to be fixed, and how I can come and fix this. Because a lot of investors at early stage, they just don't want to write the check. They also bring their network. And I think that is very, very helpful. And if you're a late stage investor, like I'm an advisor in another late stage fund, and we are looking for performance data. And for us, that's the only thing that matters, because we want to see your numbers, we want to see your financials, how much you have gone, and when is the exit. So it's all about the narrative. It's all about the storytelling, whichever phase you are in, and how well do you connect with the investors. But again, having said that, I want to say that there are very few deals that are chased by investors. Every investor wants to get into those few deals. So also investors will have to pitch themselves that how good they are, not just writing a check, and what they can do for these founders. And I think we're seeing a market right now. It's not an investor's market; it's a founder's market, and it will be more and more like that. And as we will see more micro funds are becoming a institutional asset, more micro funds are becoming an asset class, we will see it will become more and more founders market. So I think founders are at a very good opportunity right now. They just have to make sure that they play their narratives well, and also they understand that if there is an investor fit. A lot of people come and pitch me about something which I don't even invest. So I think understanding whom are you pitching, and who you want to live the life with for the next 5 to 10 years. So I think if not 10 years, at least 5 to 7 years. I think that's also important. So you can get out of your marriage, but the moment you take a check from a VC or a private equity fund, especially from a private equity fund, it will be very difficult to get out of the divorce. So understanding that also is important.
Long term. Kyle, your thoughts on this?
Yeah. I mean, I actually tend to think this is, there's a few factors that make this a particularly great time to be hearing pitches, right? We've come off of several years worth of just, I don't want to diminish what many founders go through, but the degree of difficulty was not necessarily there. And there was times where you'd see decks that felt like some sort of innovation Mad Libs, right? Like, I mean, we all joke about the like Uber for X, but you had this sort of what I would call a lot of innovation air guitar amidst quality pitches, right? And we just lost the backing track. We just like there's no song to play air guitar to. You have to stand up there. You will notice if this person is faking their way through it. You will have an opportunity to hear, hey, here's not a company that I built in the context of today, but here's my vision for tomorrow. Here's an insight that isn't just relevant, that has to be new. It can't just be I borrowed someone else's, because we're all making it up. We're all figuring it out as we go. So I think that part plus the Zoom part. Hey man, if you can't successfully pitch over Zoom, from my standpoint, investor wise, I'd love to sit across the table. But if I'm investing in you, you can't pitch over Zoom, especially now. I don't love your odds of making it. So you get these kind of tests that are important to us. They're important to the people that are going in there. And then I think we're fortunate. I think what Gayatri said around, pitch, a very founder friendly market. I think that, we've been fortunate, especially being able to work with Elysian Park Ventures and having a, quality deal flow. And I think our reputation for having kind of accelerated some of those companies, bringing the 2,000 plus RGA creative tech talent to the table. So we can look at some of these things right now and say, how can we help them take that leap forward? But yeah, I think ultimately, a lot of what everybody said here, how do you, it's really this unique time to see that founding team, that insight, all of those things we all talk about, they're harder to get by right now. And if you can clear that bar, I think you can maybe have a greater degree of confidence, or it's easier to get to that place where somebody's really proven something just through that first meeting than maybe it was before.
It's very valuable. I think if I'm getting into the head of a startup listening to us now, this is priceless. I would add as well, when I'm now working with a startup and preparing him for a session, I have two let's say lists in my mind. The first list is, what are your unique, I would say, how are you better than others, and what are you bringing to the table, and what have you created so far? What is the things you bring? Yeah. The second list is including traction, including what you've done and the uniqueness of your solution. The second list is what are the problems and the challenges. I want you to put them straight away, most of them. So because it goes in the mind of the investor anyway. So you kill it, you show that you addressed it, and you refer to it. It shows a lot of integrity and a lot of, I would say, competence as a team. To be able to structure this in a great story, and always say what you do in the first sentence. Don't let people for 3-5 minutes until they understand what you do.
So can I interject for a second? I think something you kind of said in there is really important, which is one of the biggest red flags I think you could have right now is somebody who comes in and paints too rosy of a picture. That and somebody who's showing you number where if their numbers look like a return to normalcy next year, politely send them on their way. I think, and we look, even big businesses, you saw this, right? Like you can kind of see the companies that wisely sort of advised the street or advised whoever those investors were that there's a rocky path. And then there were the ones that were eager to say, don't let someone kick the can down the curb. It's going to be a hard year ahead. And the extent to which someone can openly discuss that, to your point, with an investor is a really good litmus test.
Excellent. We are about to do a last final round, and I want to get a bold statement prediction out of you regarding the future. Let's say we have this another call, a second round in 3 years' time. Yeah, we call each one of you and we sit down. What happened in the last 3 years? What was the major breakthroughs? Which technologies grew? Give us a bold prediction of where the world of sports and sports tech is. Andrew, I'm sure you can pave the way.
I knew you were going to come to me first then. Well, I'm not sure if I want to give the game away and tell you, but look, I think that there's one which is already on its way, which is an in-body or under-skin athlete performance, which is we all go, oh no, I'm not sure about that, but look, the reality is that I think we're going to get there. Whether that's a chip or a pill to monitor athlete performance. Look, I think that's almost certainly going to be there or thereabouts.
Athlete performance chip, okay, maybe the same chip that Elon Musk is going to put in our minds, maybe an upgraded version of that. Hampus.
Super hard question to answer. I think that was an interesting point, and I think I hope there will be discussions on where do you draw the line. I think the development in sports have been kind of interesting. I know a lot of owners are pushing for solutions like that to monitor players, but I also know a lot of players are not really keen on being monitored 24/7 for privacy reasons and so forth. Where do I put my money? Very hard question. I would go with the bets that we've made in esports platforms for people to be able to across the globe compete in esports and in different type of computer games and so forth. I think that's going to be a massive market going forward.
Excellent, thank you, Gayatri.
Predicting the future is very difficult because I think that sometimes the future performance does not correlate with the past, performance data. But this is what I can hope personally, and that more institutional money, I hope they come into sports. And as we are seeing that private equity funds, they are coming into sports. But I personally also hope more other institutional funds like pension funds and other come into sports, become LP in the venture capital funds. I'm speaking personally for myself, but also we want to see more such money come into the clubs and federations also, because I feel this is one consumer ecosystem that is still under capital deployed, still untapped. And if technology can be married with this particular industry, there is a lot of opportunities can be kept. And I think sports is an asset class, not just as an industry, but there is also a digital part of it that can be built as a separate asset class. And that has not been tapped by the clubs and federations. And I hope that happens in the future. But again, I cannot predict the future. I can only hope. And from the venture side, we VCs will continue to do our job, looking at investments, looking at technologies. I don't think there will be much changes from the VC side, but I hope some changes will be coming from the clubs and federation side.
Guy.
Yeah, so I think there's, not to be overly dramatic, but I think there's sort of a fundamental problem, and I don't know when it rears its head. And I think everybody here's touched on different aspects of it, especially I think Gayatri talking about fans. We've touched on various investment dollars that'll come in that may or may not have fan friendliness front and center as much as maximizing profits and revenues. And I just often take a step back and look at who the big gainers over the last decade plus are and how they're approaching things like intellectual property and monetizing. And the common thread across all of them is they own the consumer relationship and they own that data. They have credit cards on file. Like that's such a measure of becoming that powerhouse. And sports has done very well with a disintegrated consumer fan relationship. And maybe that continues on. I know when we talk about rights and selling rights versus OTT, I just think there's a moving from a push to a pull model, if you will. There's how do you use a lot of those relationships? How do you, I saw something from one of the heads of innovation at Turner around, will highlight rights be worth more than live rights in the future? And how, all of these different forms that it's going to take. But I think above all, to me, the longer that teams and leagues fail to think about their full digital ecosystem, think about that full fan experience, creating something that's more functionally integrated and being able to maintain, control that relationship. I think they do so at their own peril. And I think that literally you can point to almost any industry and point to the 5 to 6 tech titans who mowed people away by owning those relationships. So maybe it doesn't happen here. Maybe we can keep telling ourselves sports are different. But as of right now, there's a lot of industries littered along the highway who also said they were different. So that's kind of where I look at a lot of that data-driven fan experience is going to be everything.
Fascinating. And, I was investing in other verticals before, founding Hype 5 years ago. And I see the growth and the evolution of our industry. And I think we should have a lot of gratitude. I think we are in the right place in the right time. As you said, nobody knows where it's going, but it's going. And it's going fast. Any final note from anybody, or we can wrap it up? I just want to say a big thanks to Andrew, Kyle, Gayatri, Hampus. I think it was really a fascinating, great session. And see you all next time on Hype